Popularly known as the Oracle of Omaha, Buffett is widely seen as the most successful investor of all time. The 90-year-old currently sits with a net worth of $103.7 billion US. The most popular living value investor, Warren Buffett filed his first tax return in 1944 at age 14, declaring his earnings from his boyhood paper route. He has given away a total of $37 billion US for charitable causes during the last 20 years. If you were to adjust these donations for compounding interest, Warren Buffett would probably be at least $50 billion US richer. The simplest scam is you tell people that you will invest their money for them and make them more money. They give you their money and you steal it. They tend to notice this eventually, though, and get mad about it. There are ways to delay or mitigate that. You send them fake account statements, you tell a compelling story about how their money disappeared, you do a Ponzi scheme where you steal later investors' money to pay back earlier investors, etc. You can make it work, at least for a while, but there is always that central difficulty, which is that your investors want their money back and you have stolen it. So it is tempting to design a scam where they don't want their money back, a scam where getting an investment return is not the investor's main purpose. Fake charity, they give you money, you say you will spend it on some unobservable charitable endeavor, you steal it, is one obvious approach, but has some difficulties. You need to find marks who are motivated by charitable purposes, and for many scammers, it is easier to inhabit the character of a successful businessman than that of a philanthropist. The better approach is a scam where investors do expect to get something of value for themselves, but not from you. It's even better if they actually get it. Ace investor and billionaire Warren Buffett's Berkshire Hathaway has been tricked into a bad investment by an enterprise that ran Ponzi schemes on solar energy and was luring investors by flaunting federal tax credits. Berkshire Hathaway reportedly lost tax credits and faced charges as the investments were invalid. Warren Buffett's investment conglomerate, Berkshire Hathaway, took a $377 million hit in the first quarter of 2019 due to prior year's investments in a group of funds run by a company that's now believed to be a Ponzi scheme. Between 2015 to 2018, Berkshire Hathaway invested a total of $340 million in tax credit investment funds sponsored by a California-based clean energy company called DC Solar. Berkshire made the disturbing revelations in a regulatory filing during its annual shareholders meeting. In the filing, the company admitted that it was the victim of a massive Ponzi scheme. In December 2018 and during the first quarter of 2019, we learned of allegations by federal authorities of fraudulent income conduct by the sponsor of these funds, Berkshire Hathaway said in its first quarter financial report. As a result of our investigation into these allegations, we now believe that it is more likely than not that the income tax benefits that we recognized are not valid. As CCN.com reported, Munger called Bitcoin fans traitors who worship at the altar of history's greatest traitor, Judas Iscariot. For reference, Judas was the apostle who betrayed Jesus Christ for 30 pieces of silver. Buffett also reiterated his Bitcoin hatred by saying buying it is mathematically dumb. In a February 8 affidavit related to those proceedings, an FBI agent said the manner in which the Benicia, California-based company appeared to have operated reflected evidence of a Ponzi-type investment fraud scheme. The U.S. Securities and Exchange Commission accused DC Solar's owners by name of engaging in a Ponzi scheme, according to a separate court filing. DC Solar allegedly defrauded many investors with its fanfare and charity activities and concealed alleged fraudulent ways. The Bay Area business was making mobile solar generators and also leased them. Warren Buffett's company plunked money to derive mileage from significant tax credits and profits. Many regional banks also stepped in as financial backers of the company. The names included Pasadena's East West Bancorp, Valley National Bancorp, and United Financial Bancorp, Inc. DC Solar was promoted by a former car mechanic, Jeff Karp, off along with his wife, Paulette. They succeeded in creating an impression of running a growing business dedicated to environment-friendly products. Buffett's secretary, David Bossanek, confirmed to Bloomberg that the funds mentioned in the regulatory filing were related to DC Solar. Founded in 2008, DC Solar touted its ability to provide very favorable tax consequences to investors, which turned out to be a lie. The company filed for bankruptcy in February after the FBI and IRS raided its headquarters in Benicia, California in December of last year. The FBI alleged that the company had been using money from new investors to pay old investors who had leases for the company's solar generation equipment. Authorities determined that DC Solar had sponsored fraudulent funds that totaled $810 million. Other victims included insurer Progressive, which recorded a $156 million loss in the first quarter, and Southern Californian bank East West Bancorp, which took a $7 million hit in Q1. In total, Berkshire Hathaway invested $340 million in tax equity investment funds tied to a California company called DC Solar. The sham mobile solar generator company had bragged that it could offer very favorable tax consequences for its investors. That was all a lie, according to federal authorities. The $340 million investment loss Berkshire incurred in the swindle is tiny compared to its massive $190 billion stock portfolio. However, the incident underscores that even savvy financial wizards like Warren Buffett can be hoodwinked. Berkshire's charge reduced first quarter operating profit to $5.56 billion, up 5% from a year earlier. This year's results excluded the impact of Berkshire's 26.7% stake in Kraft Heinz Co., which has yet to report audited quarterly results. Berkshire's $340 million investment is small relative to its $738.7 billion asset base, which includes $191.8 billion of equity investments and $114.2 billion of cash. The company also has its own renewable energy projects. The elements of a fraud inside the business tumbled out after an FBI raid on the company that followed a glittering Christmas party where big money was spent. The raid brought curtains to the extravagant life of Karpoff's. DC Solar and the business bust. The 100-plus workforce lost jobs. The Martinez mansion of the promoters, stretching 4,100 square feet, is in foreclosure now. The flashy enterprise attracted the attention of many investors, who included Warren Buffett's Berkshire Hathaway Inc. and many others who came on board as investors eyeing federal tax credits. According to authorities, Karpoff's managed to fleece $800 million by enticing investors to put in money as a do-good incentive that would fetch big tax credit in the solar sector. Karpoff's built up favorable media hype by funding charitable pursuits, including support to victims in Northern California neighborhoods affected by wildfires. DC Solar fraud has pushed many investors into charges after reversal of tax breaks running into millions of dollars. The federal tax credit since 2006 has been a catalyst in fueling solar surge as an alternative electrical resource. Berkshire admitted that it was more likely than not lapse the tax benefits it drew from some investments spanning 2015 to 2018 on the ground that they may be invalid. The May filing finally identified the name of the sponsor, which was none other than DC Solar. By reversing the tax credit, Warren Buffett's company incurred $377 million charges in the first quarter. Even big companies including JP Morgan Chase, Bank of America, and paint maker Sherwin-Williams have been investing in renewable energy firms to earn tax credits. Although the federal program was free of scams, the DC Solar episode has been a shocker and sent a signal to all investors running after investment tax credit solar without due diligence on the credibility and health of such business units. While the FBI and Securities and Exchange Commission are saying investigations are in progress, the FBI and SEC did not comment. Buffett may be 88 years old, but he's still super sharp and incredibly competitive. Don't let his mild-mannered appearance fool you. He's a shark. Want proof? Buffett slammed Elon Musk's ambition to launch a Tesla insurance product. Buffett said he'd bet against it because the insurance industry is too tough to break into. It's not an easy business. I'd bet against any company in the auto business getting into insurance. Keep in mind that 1/3 of Berkshire's business is in insurance, including Geico, so it's no surprise that Buffett threw shade at a potential competitor. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Do not forget to subscribe to our YouTube channel. Hit the bell icon for more updates and notifications. Stay safe, and we will be back soon with another video.